I'm going to try to do a live trade. Hey everybody, this is Spooky's Revenge. We're back with another episode of the 5-year $500 Rags to Riches series, and I want to try to do a live trade today. So I'm a little bit busy, so I can't really focus, but that's kind of why I wanted to do this video, because I want to show you guys that it doesn't really require a lot of commitment to looking at charts and stuff. So I might be running out of time here because this one's about to push, I believe. We've got an impulse and a pullback, right? And this is in a healthy retrace territory for those who aren't familiar with the Fibonacci retraces. We have an impulse here. Prices drop down. This is the 50% line. 50 to 61.8% is a healthy retrace. It's just a measure of people that are still buying in compared to people that are taking their profits or selling their eliminating their risk exposure. So it's the ideal range, and we're starting to pull up out of that. So what I've done here is I've set my alerts up just the way I described it in the other video, so that on HSDT and TENX both, I have a 15-minute alert and a 2-minute alert on candle close when there's a bullish signal. And I don't have to necessarily delete one and create the other, or start one, stop the other. I'm just going to let them fire off when they fire off, because the bullish one on the 15-minute is only going to fire off every time there's a 15-minute bullish candle. And these only matter when there is volume. So I can always just delete them at the end of the day. So with all that said, and all that done, let me get my face out of the way so you guys can see the whole thing. It's the wrong screen. Sorry, guys. I apologize for the congestion again. And I will go through the portfolio here in a second. I just wanted to show you guys this. So basically, while I'm working in another tab here, I'm tearing out a bunch of stuff from the system, and obviously making sure it doesn't fall apart. But while that's kind of going off in the background, I'm just looking at these two stocks and letting the alerts handle it for me. So in this case, HSDT is in a bearish state on the higher time frame, so I don't even need to look at it. I'm waiting for that 15-minute to fire off. And if I want to pause the 2 minutes in the meantime, I can. I just know to ignore those signals because it doesn't mean anything unless this one is in a bullish state. So for TENX, however, we are in a bullish state, so I'm very focused on waiting for this alert to fire off when this price closes above here and throws a bullish signal. So this candle here has another minute and 20 seconds, so I know that I can at least just look away for like a minute and a half, minute and 20 seconds or so. Now it's a minute 13. So I don't necessarily need to sit here and stare at this, right? Especially if you're on the bigger time frames, if you're using maybe the 5-minute, 30-minute pair. You only really need to pay attention to it every 5 minutes. And if it just starts running, that's okay. We can always just pass it and not try to trade that. But I'm really just waiting for that signal to fire off. So if that happens during this video, that's great. If not, I don't really care, right? This is the approach, and I let these sit there throughout the day, and I'll just trade them on and off when I can. This is the first time I've been able to look at anything for the week, so I didn't trade anything yesterday. And today is the only day that I have a couple minutes to even set up the alerts and stuff. So if you can't trade all day, that's great. You're automatically not overexposing yourself to the market, so that's a good thing in most cases. That's what usually destroys 90% of day traders when they go full time. They just do too much too fast. And if we look at the portfolio, well, that's kind of cooking. You can see I did take one trade here based on this. I'm sorry, it was on HSDT. I grabbed this one here, and it sold off and hit my stop loss for about an 8.5% stop out. And that's okay, right? It was because I wasn't paying attention to the bullish time frame, the bearish time frame, I'm sorry, the higher one. Because we actually threw this bearish signal here, and then I entered the bullish signal against the trend like a dum-dum because I wasn't paying attention. So I could have avoided that, but it was $1, so I'm okay with it. Now I know for a fact that since I've examined both of these tickers and both of the time frames, I won't repeat that mistake because I can use that lesson and just kind of pay attention when I need to pay attention and then stop paying attention when it's time to work. So I don't want to like talk in circles. I'm just kind of expecting this to pop here in a second. Anyway, it's got 90 seconds left on that candle, so let's go look at the portfolio. So obviously there's been some pretty significant drawdown, and again, I don't mind sharing this stuff. That's where you're not really going to see in a lot of these account series is that, you don't see the dark stuff, the red times, which is fine, right? Because remember, we have a plan for all this stuff. So even if I get my butt kicked on drawdown or speculation, I'm okay. So with that said, still on the overall positive green slope here, I don't really care. there's been some pretty heavy drawdown in the broad market, and that's kind of affecting my bigger positions. Like Johnson & Johnson is now red overall. Now, granted, I did to average up into this, so it raised my average, which, when we hit drawdown, it's going to be closer to my cost basis. But that's okay, right? Because if I look at this one, it's very small, right? Like, you got to look at the higher time frames here. I'm in a pretty good position still. I mean, we're right around where I bought, so I'm not going to worry too much about that. And you can see it snaps back. So for the day, I'm up about $31. So it's okay, right? I know a lot of people freak out when they see some drawdown. It's okay, right? Tesla and Clip, as always, these are not speculative positions, so getting a low average isn't really a priority here. It's just amassing as many shares as I can and then letting them pay themselves off in an aggressive way, right? So I don't really care too much about these red numbers here, but they do, of course, factor into the account value. So I do need to be mindful of it if I'm committing to that. But that is ultimately why I'm capping these at 100 shares each so that they don't take over the portfolio. Oops, sorry, I had an alert go off, but it was for another ticker, not for this episode. Okay. Sorry, my trading view's going a little ballistic here. All right, so yeah, you can see that if I look at the day's P&L here, I've got $10.75 up or 3% up on Clip. That's just because it's a bigger position, so every percent point is worth about $1.50 or so. And then the NEO contract is pushing up about 22.22%. Now this I did average down on. Then I got my cost basis down to 25 cents, and I immediately have my sell orders set for, I'm sorry, not working. There we go. I've got 3, so I'm going to sell 3 out of the 4 contracts at 28 cents. So my current cost basis is 25 cents, and I might lower that if I want to. But with options, you have some fees, so I just wanted to raise it a couple more cents, and that's okay. Either way, the goal is to reduce risk exposure at this point, now that I've successfully moved the position down. So let me just keep an eye on this too, because it's throwing a lot of alerts here, but I also have a lot of other tickers. Okay, so nothing I care about. Oh, well, so I guess we can use this as an example too, right? Since we didn't get the bull signal and this adapts to the volatility, it's telling us not to trade yet. And that can keep us out of situations like this where we get that H-shaped potential H-shaped continuation. And this just tells us that not enough people have taken profit from this impulse, or maybe the volume's falling off, and we don't know, right? So rather than jumping in and hoping we get that retrace and then stopping out repeatedly, we can always wait for a confirmation, and that's where Stocks Buddy comes in. And again, if you don't like Stocks Buddy, that's okay, right? I'm not trying to pitch this on every single episode, but it is an easy one that kind of helps us identify those confirmations. You can use other indicators. That's a-okay. This is just the one I use, and for consistency, I'm going to keep referencing it. But again, you don't have to. So looking at the daily P&L here, you can see that the NEO contract is up about $16. Everything else is kind of flat or red for the day, except for this one here, MINM. So I do have quite a few speculative positions. So I have these ordered by market value here. And you can see, obviously, the top positions are still the top positions as far as allocations go. So I'm not committing like $200 to a random ticker that's a low float biotech. But they're pretty sizable in comparison to what I've done, but that's okay, right? Because I can still speculate. I still got some cash left over. I don't have to worry about these. Still waiting for SFE to be taken out of the portfolio so I can get that $1.65 per share payout. I did contact Webull, I think yesterday, and they said that they're still just waiting for the company to process it. So I have to keep waiting. CION, CCTG, ROA, SD, SSIC, BFRI, MINM, those are all speculation. Now SD has a special dividend payout of $1.50 per share. The ex-div date was February 2nd. It's been adjusted. That's why you see it down a little bit. And then the payout date here is on the 20th. So we're approaching that, and I'll get that payout. I did add 1 share after the adjustment, which was here, just to lower my cost basis a little bit. And then you can see right here. So I bought, let me filter that, sorry. So I bought my first share at $14.56, which is around the time where it was when I posted that. And then I added 1 share at $11.76 in the attempt to recoup. And I'll sell at break even for a net profit. Otherwise, I'm technically profitable now. If I cut the position, I'll just get that tax advantage, and I'll be able to claim 100% of the realized loss. But I just also want the share P&L. So being a little bit, not really greedy, but I'm paying attention, right? So with all that said, let's just check back on these really quick. I don't want to make this episode too long. It's about 10 minutes right now. And I just kind of want to show you guys the approach, whether or not I get a day trade out of it. If I don't, that's okay. I'll just do it off camera. If I do, that would be much more beneficial. And maybe I'll keep a recording up and then I'll just kind of snip some of these in, but it doesn't have the same value as if I'm walking you guys through it. So I'll just continue to keep an eye on this. And then, of course, if TENX goes bearish on the higher time frame, then I can pause that 2-minute one just so I don't see those notifications for the alerts until I see the bullish one kick back in. So right here, it's got a decision to make, right? It's got to break below, oops. It's got to break below this level, or it's got to break above this level, right? So as soon as we break out of this range, we're going to get our direction in most cases. The volume should come back in and cement that direction, and then I'll either have a trade or I won't. And then it'll enter a bearish state, and then I'll have to turn off that lower time frame alert. So hopefully that makes sense. And this is another example of where I could use the 1% rule. So if I were to, let's say we look at TENX really quick, and let's just say, just for exercise here, that we get an alert here, and I want to use this level here as my stop loss. Okay, that's a $1.97 stop loss, and I want to do a 1 to 1.5 risk reward here. So now $1.97. Let's just bring up my calculator here. So $2,800 times 0.01. That's so $28 is 1% of my portfolio, which means that I can use 1% of the portfolio, or I can use 1% of my speculative amount. I'm just going to use 1% of the portfolio, just to show you guys how big that position would be. So now if I divide this by 197, right, because my max loss can only ever be $28, and my risk here is $1.97. So I need to figure out how many times $1.97 goes into that $28 risk, and it's 14. So 14 shares times $16 would be a $224 position. Now I don't have that. I don't have that free cash, so I'm not going to try that. But if I were just trading fewer, bigger positions, I could use that. But since I also have the speculation and investment, if I do 2,800 times 0.3 to get 30%, that limits my risk to $8.40. So in this case, $8.40, all right, 8.4 divided by 197 would be 4 shares. So if I were to buy 4 shares, then that would be 1% of my speculative amount that I'd risk. So 4 times $16, $64. I have that. So I could buy 4 shares. Next signal I get, then I would be guaranteed to either get a 2% profit on that speculative amount of 30%, or I would lose 1% of that speculative amount of $840. So predefined outcomes, either way, it's awesome. I love it. But it doesn't look like we're going to get that trade on this recording if it keeps falling down. So, and it's okay, right? We don't want to force things. So I'm going to end this recording here, and I'll let you guys know on the Discord channel what happens with this. And if I do get a trade, I'll keep the recording going, and I'll just snip out that piece of it. And then I'll post that maybe as a short or something, unless it just blasts right here. But we can't deal with what ifs. We got to deal with what is. So I'll end this recording, and I'll catch you guys next time. Thank you all for watching, and goodbye.